Wake up. It's your daily dose of cryptocurrency news, and I'm your host, here to guide you through the latest happenings in the crypto space. Buckle up, because we've got a packed show for you today. First off, an analyst is warning that recent calls for a Bitcoin price crash may be driven by self-serving sellers trying to sway public opinion. These sellers are likely anticipating a downturn and are using social media to influence sentiment and boost their own positions. It's essential for investors to be cautious of biased information and make informed decisions based on objective analysis. Now let's talk about the major divergence between Bitcoin whale and retail investors. According to sentiment, this gap is a warning sign for the market, indicating that institutional investors are becoming more optimistic about Bitcoin's future, while retail investors are becoming more cautious. Some analysts predict a macro rebound and new highs for Bitcoin, but it remains to be seen how the market will play out. As we take a look at the rest of the crypto landscape, we can see that Evernorth's unrealized XRP losses are exposing the pressure on digital asset treasuries. This is a concern for companies that rely on holding digital assets, as the current market downturn is affecting their business models. The mining industry is also feeling the heat, with Bitcoin miner hash prices nearing $40, a concerning level for miners. This has forced some miners into survival mode, leaving the entire mining supply chain struggling with financial difficulties. And in other news, Trump Brothers American Bitcoin has boosted its BTC holdings to $415 million, sending the stock seesawing. Unfortunately, the article content is not available for me to summarize, so we'll have to keep this one on the back burner for now. Despite being in the crypto space, companies still require access to traditional banking services. This includes corporate banking accounts, secure storage for funds, and quick access to liquidity. Unfortunately, due to regulatory challenges and risks, many crypto companies are forced to operate without these essential services. It's been a tough month for crypto, with April seeing a significant loss of $161 million due to various cyber attacks. We're seeing the rise of supply chain attacks, unsophisticated attacks, cross-chain and interoperability attacks, and even social engineering tactics. It's essential for investors to stay vigilant and protect themselves from these types of threats. North Korea is using cloud services to launder stolen cryptocurrency, a sophisticated technique that's designed to evade detection. This highlights the growing threat of state-sponsored cybercrime and the importance of robust security measures. Last but not least, we have the Oracle exploit, a growing concern in DeFi. In 2022, Oracle manipulation cost victims $219.6 million, with algorithmic market makers and yield optimizers among those affected. Chainlink, the leading Oracle provider, lost $48 billion in TVL in 2022, dropping from $56.7 billion to $8.7 billion. And now, for a little break, let's head to Blockchain Bytes. Here's a fun fact for you. A single block on the Ethereum blockchain, like a single pizza, has been known to be valued at thousands of dollars. But what's really interesting is that in Ethereum's early days, you could buy a pizza for just 10,000 Ether, or about $43 at the time. Talk about a pizza party. Now let's get back to the news. As we wrap up today's show, I want to thank you all for joining me. It's been a wild ride through the crypto space, and I hope you've enjoyed the ride. Stay safe out there, and don't forget to keep your wits about you. Until next time, it's your host, signing off.